So today in this lecture I will discuss about structure of Indian banking industry. Most of the time questions being asked from which bank belongs to which category, means for example IDBI bank is given, what is it, public sector bank, nationalized bank. So this type of categorization we sometimes just forget. So in this lecture I try to clear your doubt, clear your confusion here, that what are the two main categories of banks and how the banks are divided in this structure. So first of all, I'd like to tell you that our Indian banking industry is divided into two broad categories. What are they? First one, scheduled banks. The second one is non-scheduled. Non-scheduled banks. Now the but obvious question will come that which types of bank are scheduled banks. So some of the conditions are there to be eligible for this scheduled banks. First and the most important one, it must be included in second schedule of RBI Act. This is the most important condition for being scheduled bank. Second schedule of RBI Act 1934. And now the question comes, which type of banks are eligible or satisfy which condition to be included in this second schedule of RBI Act 1934. So to be eligible for inclusion, a bank must satisfy three conditions. For inclusion, a bank must satisfy three important conditions. What are they? First one, it must have paid up capital and reserves for aggregate value of at least rupees 5 lakh. Means to start a banking business and to be included in second schedule of RBI Act as scheduled bank, a bank must have at least rupees 5 lakh capital. Second condition, it must satisfy RBI that its affairs, means its banking affairs or business affairs, are not detrimental or hampering the interest affairs, not detrimental. Detrimental is the most fitting word. Detrimental, not detrimental to interest of its depositors or customers. Okay, so this is the second condition. Third condition is about, it must be a corporation. Must be a corporation and not partnership firm or not a single owner firm. These are the three main conditions. It must be a corporation and it is not a partnership firm or single owner firm. So these are the three conditions that any bank has to satisfy to be included in the second schedule of RBI Act. Now, what are the facilities enjoyed by scheduled bank? Once it is declared as scheduled bank, what are the facilities it enjoys? It enjoys certain privileges, that is free concessional remittance facility through RBI and its agents, and borrowing facilities from RBI. And it means it can borrow from borrowing facilities from RBI. Means it can borrow from RBI whenever it needs. So this is the privilege it enjoys, and for that it has to do something. For enjoying these facilities, it has to follow some of the conditions. What are they? First, it has to maintain an average daily cash reserve with RBI. Okay. And the second thing it has to do, it has to submit periodical returns, balance sheet returns, periodical returns to RBI under RBI Act 1934 and BR Act, Banking Regulation Act 1949. So this it has to follow for enjoying these facilities. Now the question comes, what type of banks are scheduled banks? What are their categories? So now comes the scheduled banks types. Are basically two types. First one is scheduled commercial banks. Scheduled commercial banks. Now I will tell you that which banks are come under scheduled commercial banks. First one, SBI and all its five associates. Next, all the nationalized banks. 19 banks are nationalized banks, which I have told you in my previous lecture. And third one is IDBI. Now why I have written this separately, the reason behind that, it is not a nationalized bank. It is not a nationalized bank, but it has full government ownership, or it comes under category public sector bank. So these three variety of banks are public sector banks: nationalized banks, SBI and IDBI. Now some more varieties are there. Next one, foreign bank. Foreign banks, which banks are called as foreign banks? Whose offices are in, whose major headquarters are not in India, outside of India, but their branches are in India and they are doing their business. What are they? HDFC, HSBC, Standard Chartered, and etc. Now I think you will understand my point, which types of banks are foreign banks. Now next one is RRB, regional rural banks. That also I have told you in my previous lecture. What are RRBs? Regional rural banks are also scheduled commercial banks. Next, other scheduled commercial banks. Now what are they? Other scheduled commercial banks. These are basically private banks, Indian private banks, whose headquarters is in India, but they are not government owned, they are privately owned. And some of the examples are Axis Bank, ICICI, Yes Bank, Bandhan, newly opened private bank. So these are the other commercial banks or private banks. They are also comes under scheduled commercial banks. So now comes one more bank in picture. What are these? Scheduled Cooperative Bank. This is also very important, and they are also doing business in India. They are also functioning in India. Achha, which type of banks are scheduled cooperative banks? They are actually small financial institutions. This is its basic definition, and they are regulated by Banking Regulation Act 1949 and Banking Laws. Cooperative Societies Act, and it is 1965. So these are the two basic acts which apply on scheduled cooperative banks. Now this is also divided into two parts, and most of the time in NABARD or RBI, its types are basically asked in question. What are scheduled cooperative banks types in subjective part, and most of the time in objective question also its types were being asked. So first one is rural cooperative bank, and the second category is urban cooperative bank. Now the question comes, what are they? What purpose they solve in our society? So rural cooperative banks are basically all banking activities are regulated by shared arrangement between RBI and NABARD. Means its banking activities are monitored by both the regulators of banks, RBI and NABARD. Reason behind it is also a rural bank, so rural activities of banking, it comes under NABARD, and some basic banking, for its basic banking activities, it comes under RBI. So this is the reason. And all management creation and registration activity, it is managed by registrar of cooperative societies, and in short they are called as RCs, registrar of cooperative societies. Now the question comes, what are their types? They are also divided into three types. First one is state cooperative banks. Second, district central cooperative bank. And primary agriculture credit societies. These are the three types of rural cooperative and scheduled rural cooperative banks. Now, this state cooperative banks operate at state level, at apex state level. Means in overall state their presence are visible, and in district central cooperative bank they are concentrated to particular district level. For example, in Lucknow and for example in Howrah, these are the two districts, and these type of banks belongs to only that particular district. Their banking activities are restricted to only one particular district. And in primary agriculture credit societies, they are limited to only at village levels, or you can say some small blocks also, village levels, and at grassroots levels. Village means grassroots of the economy. So they operate at village level, primary agriculture credit societies. So this is the part of rural cooperative bank. Now the question comes, what are urban cooperative banks? Urban cooperative banks, in that case, banking activities are regulated by only RBI, because they are operated under urban sector. So in urban, no NABARD, only RBI. And its registration and management activities are managed by same RCs. Next the question comes, what are non-scheduled banks? So non-scheduled banks are also called as local area banks. These are local area banks also, non-scheduled banks. And the basic definition, it is not the banks which are not included in second schedule of RBI Act 1934. They are called as non-scheduled banks. Now some of the conditions you must know, what non-scheduled banks they can do, what they cannot do. So the three important things I like to tell you. First one, it's subject to cash reserve requirement, but they are not required to keep them with RBI. Instead, they can keep them with themselves only. Means the cash reserve requirement, which is also known as CRR for scheduled commercial banks, they have to maintain cash reserve ratio, but not with RBI, but themselves. So they are not subject statutory cash reserve requirement, not with RBI, but with themselves. Second part, they are not entitled to borrow from RBI, not borrow from. Now the third condition, they may approach RBI under abnormal condition or circumstances. Abnormal conditions. So these are the 3 points that you should remember always. So this is the basic overview of Indian banking industries and types of banks. So I hope the banking structure is clear to you.